The Fed, are they just being little babies and they don't want to actually raise rates by 50 basis points? What's going on with the 25 basis points? I said they're bringing a water gun to an inflation war yesterday.
No, yeah. I mean, so these guys are firefighters, right? I mean, that's it. I mean, imagine like the showing up to 9/11 with a water gun. That's effectively what they're doing. So the markets enjoyed that yesterday. A lot of what happened with the market response is a function of the derivatives markets dynamics. You have OPEX, options expiry this tomorrow. And so a lot of those puts are coming off the table, and that's causing this sort of mechanical lift to the market. But the reality is the Fed more or less told you yesterday they're going to mechanically raise interest rates and mechanically shrink its balance sheet until they break something. Now, they're never going to say we're going to break something. And that's sort of implied by their growth forecast, where growth never goes below trend, employment rate never goes above trend, but they've got interest rates, if you look at the dot plot, going both above trend. And so it's pretty clear that the markets and the economy are on a collision course for the Fed to break something. It's just a matter of when, not if.
Is it guaranteed that they're going to break something?
It's not guaranteed, but let's be realistic, right? Like the Fed operates in this sort of vacuum whereby they believe monetary policy has, quote unquote, long and variable lags. That's one of the creepiest things they say. They always say it and like look shiesty when they say it. But and this is true, right? We know monetary policy operates with long and variable lags, but those lags have become shorter, right? There's so much forward guidance now. Every time they open their mouths, the markets take what they're saying and reprice it into bond markets, into rates markets, into equity markets, et cetera. And so those lags have shrunk over time. It's impossible to measure how long the lag is. But what I mean by this is at the end of the day, they're not going to know they've broken something until the markets tell them they've broken something. That's the problem. Inflation is not going to come down fast enough to get them off of this policy path.
Why did they only do 25 basis points and not 50? Were you surprised by that?
No, I'm not surprised by it because the markets were pricing in 25. If you look at sort of the Fed does not like to surprise markets, at least not going back to the Bernanke Fed and Yellen Fed. Greenspan wouldn't mind surprising. Obviously, Paul Volcker didn't mind pissing people off. But the reality is in this new Fed regime, it's very unlikely that the Fed will ever do anything that's not priced into the market for that meeting. And so only 25 basis points were priced in. And part of it, obviously, we've got a lot of volatility. Russia, Ukraine is a big big risk. But the reality is they don't have a choice. They're doing the littlest they possibly can do, but they're going to do the littlest they possibly can do for as long as they can possibly do it until something breaks.
So is it fair to say they're just going to keep doing like 25 basis points every meeting as of right now, unless something changes, just 25 basis points every meeting until inflation comes down?
Yeah. So, I mean, we obviously, going back to our last week's discussion, we all know, at least the four guys in the room, or 4.5, 5 guys in the room, we all know that inflation's going up in March. I don't think anybody's going to be shocked by that. We could see in May, when the Fed does its meeting in May, it's very likely that they outline quantitative tightening, which is when the Fed shrinks its balance sheet, basically sends all the liquidity dynamics going in the reverse way for risk assets. And so we're going to get the data on that. They might choose to speed up their policy tightening projections or tighten it 50 basis points at that meeting. But what's more likely to happen is they maintain this sort of 25 basis points per meeting outline and just use the balance sheet as kind of the flex tool, if you will.
Yeah. It's does that mean that a recession is the only outcome now? Like if they keep doing this, then we just get recession? Yeah.
So here's the problem again with markets, right? The Fed believes, and according to their dot plot, according to their projections, which again are ridiculous, they're going to take. So I sent you a few charts. I don't know if you had time to load them up or not, but one of the charts is called dot plot, where we show the Fed's, the 1 year and the 2 year forecast for the Fed funds rate relative to their longer run rate. And this is the first time, if you look at their 2 year projection, that we've seen their dot plot go into restrictive territory, i.e., they think the federal funds rate is going to be higher than the level of federal funds rate that'll cause the economy to slow. And so, that's a meaningful signal in of itself. But they didn't change their GDP or their unemployment rate projections to say that they're going to go below trend. They're going to go below a level that is sort of indicative with a healthy expansion. So that's a ridiculous expectation. And so to answer your question, will we go into recession? There's no guarantee that we have to go into recession. It's that the conditions are in place for a recession to occur, particularly given that the Fed is likely to be tightening for longer than it should.
And started later than they should.
And started later. This is the lowest. I told you, talking about this for a while now. This is that was the lowest the unemployment rate has ever been at the beginning of a tightening cycle. That's the second tightest that the yield curve has ever been if you look at the 10s-2 spread at the beginning of a tightening cycle. And so, what those two indicators are telling you is, one, the unemployment rate being as low as it is that we're pretty late in the business cycle. And then number two, the yield curve being as tight as it is, as narrow as it is telling you that we're not only late in the business cycle, but we're already slowing cyclically to a place that, to undetermined location, but that undetermined location has a very high or very reasonably high probability of being a recession.
Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you're subscribed, like the video, and see you next time.